Oil has just surged almost 16% in a single week. Gold has suffered its worst week fall in 6 weeks, but silver has dropped another 6%, taking its 2-week decline to more than 12%. The Nasdaq has fallen nearly 3%, and Bitcoin has barely moved at all. So why is oil rocketing higher while gold and silver continue to fall? And could the next move from the Federal Reserve make the damage worse? Welcome to the 2% Brief. If you find this useful, please like the video, subscribe to the channel, and hit the hype button if it's available to you. Genuinely helps more people find the analysis behind the headlines. So let's start with the pricing board. Bitcoin is currently around $63,937, down just 0.3% from last Saturday. Gold closed at $4,018, down 2.2%, and moving dangerously close to the psychologically important $4,000 level. Silver fell 6.3% to $55.97. It has now lost more than 12% over the past 2 weeks after failing to hold above $60. And platinum fell 2.2% to $1,603. But once again, oil was the main story. WTI surged 15.5% to $82.49, and Brent jumped almost 16% to $88.10. The dollar index barely moved at 100.8. So this was not simply a stronger dollar sell-off. Equities turned broadly lower. Dow fell 0.9%, the S&P 500 lost 1.6%, and the Nasdaq dropped 2.9%, reversing much of last week's technology-led gain. And overseas, the FTSE rose 1%, the Hang Seng gained 1.6%, while Japan's Nikkei fell more than 6%. So unlike last week, this looked much more like a genuine risk-off move. The important exception was oil, which continued climbing while almost everything else weakened. The reason is the worsening geopolitical situation. Further strikes between the United States and Iran, attacks affecting Gulf shipping, and renewed concerns around the Strait of Hormuz pushed a substantial geopolitical premium back into crude oil. The Strait of Hormuz is one of the most important energy routes in the world. Roughly 1/5 of global oil supply normally passes through this narrow waterway. Any serious disruption can therefore affect energy prices across the global economy. Oil is no longer just another commodity. It's become the link between war, inflation, interest rates, and financial markets. That is why the economic data this week produced such a complicated reaction. The June Consumer Price Index was much better than expected. Headline inflation fell 0.4% during the month, compared with a forecast decline of only 0.2%. Annual inflation dropped from 4.2% to 3.5%, but core inflation was flat during June and fell, though, to 2.6% annually. And producer prices also fell 0.3%, while core producer inflation increased by only 0.1%. So on the surface, those figures should have supported gold, silver, bonds, and technology shares. But there is an important problem. A large part of the improvement in June inflation came from falling energy prices. Because energy prices dropped 5%, in fact, to be precise, 5.7% during the month. That inflation report tells us what happened in June. Oil's 16% surge happened this week. If Brent remains close to $90, part of that improvement could be reversed through petrol prices, transport costs, manufacturing, and eventually consumer prices. The market is therefore looking past the encouraging inflation report and asking, what happens next? That helps explain why gold and silver did not rally. Rising oil is not currently being interpreted as a simple reason to buy safe haven assets. It's being interpreted as a reason the Federal Reserve may need to keep interest rates high for longer. It may even strengthen the case for another rate increase later in the year if inflation begins accelerating again. That is a problem for gold and silver because they pay no income. When bond yields rise and investors expect tighter monetary policy, interest-bearing assets become more attractive relative to precious metals. Silver is being squeezed from both directions. Higher energy costs create inflation pressure and make the Federal Reserve more cautious, but higher costs can also weaken economic growth and industrial demand. Because silver is both a precious metal and an industrial metal, it can be damaged by tighter monetary policy and weaker demand at the same time. That helps explain why silver has fallen much more heavily than gold. So, gold is now facing an important test around $4,000. It fell to $3,960 on Friday, but recovered towards the end of the day. And silver must first stabilize around $56. A decisive break below 55 would suggest that this correction still has further to run. I've noted that it did dip to 54.79 on Friday, but like gold recovered a little towards the end of the day. The lesson is that geopolitical tension does not automatically make gold and silver rise. Now this week, the interest rate argument was stronger than the safe haven argument. The equity market also sent a warning. The Nasdaq's 2.9% fall was led by weakness in semiconductor and artificial intelligence-related shares. Investors are therefore beginning to question whether the extraordinary spending on AI infrastructure can continue to justify the valuations placed on parts of the technology sector. Higher interest rate expectations are particularly difficult for growth companies because much of their expected value lies in profits that may not arrive for many years. Higher borrowing costs reduce the present value of those future earnings. Now, this does not mean yet, at least, the technology rally is over, but it does show how dependent the major US indexes have become on a relatively small number of expensive companies. Now, the wider economic data was mixed. Inflation cooled in June, manufacturing strengthened, the labour market remained stable, but housing and consumers are still under pressure. And before the Federal Reserve had time to respond to the better inflation data, oil delivered a new inflation threat. The immediate week ahead is comparatively quiet, and so geopolitics, oil prices, and company earnings may dominate the week. So oil is now the most important price on the board. Now, for Inner Circle members, I will go much deeper on Substack this Sunday evening. The full briefing will examine the oil scenarios, the changing Federal Reserve outlook, the breakdown in silver, the technology sell-off, and the levels that could determine the next major move. You can join the free list or upgrade to the Inner Circle using the Substack link in the comment section or description below. And if you found this video useful, please like it, subscribe, hit the hype button, and share the video with someone who follows gold, silver, oil, Bitcoin, or the wider markets. And before you go, watch last week's video on screen now. I'll see you in the next one and look forward to reading your comments.